So the market's continuing to rip higher. So the question is, now that we've hit resistance and slightly broken through it, is it a break or is it a fake? Stick with me as we get into the details. My name is Brian Cannon and welcome to Markets in 5. So I'm going to walk through a couple of charts today. As always, we go through an update on the S&P 500. And I've gone in and cleaned up the chart a little bit, kind of taken off some of the prior patterns. And something that jumped out to me when I did that is we've got a potential wind up pattern. So if you look very closely, we've gotten a short-term breakout there on the resistance. So it's not uncommon when you break resistance to kind of either come back down and test it or potentially have it be a fake break, which is kind of the theme of this episode, and have it drop back down. So again, we're going to watch that really closely, but that's a very constructive candle, and the futures here on Thursday morning are strong. So if we can build off of that, then that's a pretty good sign. I mean, we've already put a good bit of our risk back on, and we'll continue to do so. We're hunting and pecking for opportunities as it relates to relative strength and seasonality. So those are moves we're making right now. But I've drawn this chart down here just as an example of what I think will happen. So you see this overhead resistance, this down channel kind of blue line, and you've got this up channel blue line forming. So it's not uncommon if you look at this example here for stocks to consolidate and have it wind up, have the stock price get smaller and smaller and smaller, and then eventually it's either going to break to the upside or it's going to break to the downside. So I'm fully anticipating this market to come up eventually and hit this top blue line. And then there'll be another level of resistance we'll be talking about, and will it break it or will it fall back down? My anticipation is that more than likely it will not break it, and it'll come back down and test this lower blue line, and it'll wind up. And then it'll eventually, as the green arrow shows, either break out to the upside or break down to the downside. So we'll be prepared either way, but just know that this year is going to be full of continued volatility. All right, this next chart here is the small caps. Anytime you can get the small caps to participate in an uptrend or kind of a rising market, that's a very good sign. So the small caps have been underperforming for the last, call it, year and a half. And recently it looks like we've just kind of gotten the breakout. So this top chart here is the small caps in and of themselves. So you can see that they kind of broke out of that down channel trend, and we've got a little breakout there. And then this bottom chart is the small caps relative to the S&P 500. And so, we've seen, downtrends and breaks in the past. So we've had this extended downtrend. So we're due for, a break, and it looks like we're starting to get it. So as you can see, the couple of charts that we illustrated, give some pretty positive signs, right? So we've gotten the breakout on the S&P. So again, it's not uncommon to come down and test that resistance and make sure that the support holds up. But we did identify with the green arrow several other areas of resistance we're looking for, and then certainly that down channel trend I think will serve as a major level of resistance. And if we can get through that, that's a huge win. But I would anticipate us to pull back down at that point. There'll probably be some geopolitical reason as to why, or something going on in the market. But just keep in mind, the market always climbs a wall of worry. And so I think just let us worry about it. Don't you worry about it. We've got it under control. And but if you have any questions or need anything, certainly just give us a shout. And look forward to seeing you on the next Markets in 5.